Hello guys, how you all doing? I'm okay myself, and yeah, in this video I'm going to answer a question that I got yesterday. As you can see here on the screen, one of you asked me, well, no, when you're trading the pin bar, because I always tell you that if you decide to wait for a pin bar as your sort of the confirmation, if you get a pin bar as a confirmation, when we always mention that you can use a buy stop or sell stop where you put the limit. I'll use an example of buy stop where you put the buy stop above the pin bar. So the question was that how far or how many points or pips do I have to set as my where I'm going to place my buy stop. And my answer to that is that it all depends. I don't use points or pips for me to decide where I should put it. I don't use points because remember, instruments are not the same. If I'm saying 10 pips on USD CAD here, it won't be the same if I'm trading let's say Nasdaq. 10 pips in terms of the size, it won't be the same. So I think it's unfair, or it wouldn't make sense for us to use pips to say when you're putting your buy stop or sell stop, you must put it at like this number of pips above your pin bar. You shouldn't use it like that. But I'll just show you the buy stop. Remember there's a buy stop, right? In terms of where you are placing your stop loss, I mean your buy stop, and where you're placing your stop loss. Remember, the stop loss is the one where you place below the zone that you are trading, for instance. Or if, let's say, we are using the same concept or the same scenario of a pin bar, you want to buy this pin bar and you decide to go with buy stop, and your stop loss will be below the buy stop, right? So in terms of the size or the space that you leave this side and the space that you have this side, it won't be the same. The buy stop, the space is going to be very small, and then for the stop loss, it has to be decent size, so that if the price decides to play around here before taking off, it doesn't have to find a stop loss here. It really makes sense. So you should give the price enough room to to move around and to breathe. But in terms of the buy stop, you want to get it as soon as it breaks the range. So I'll just look for a pin bar here. I'm not analyzing the USD CAD, don't get me wrong. So because you know that myself, I like this concept of the buy stop and stuff. I've came with it, from Nasdaq and VIX 75 or volatility 75. These are the ones that I've been testing it out on, and I feel like it just got high win rate, and that's where I would advise you to apply it on. I've never tried it on things like USD and stuff like that, but here I just opened a random chart and just to show you how I would go about placing that. So if, let's say, if I'll use this one for instance, this one. If, let's say, you were looking to sell at this let's say you're looking to sell here, all right, and you're waiting for confirmation, and then the price gives you the pin bar. Now it's the point of saying, where do I place my thing? Where do I place my sell stop? In this case, it will be sell stop because you're looking to sell. And I would say, oh, where did it disappear to? I would say, yes, it's here. In terms of the sell stop, I'll put it like that, just to like closer to it, but not on top of the line. Remember, the price has to break the range for it to reach my sell stop. Yes, I'll put my sell stop there. Sell stop. And then now, where would I place my stop loss? Because remember, when you're placing it here, where would the price still be? The price will still be where it closed, and it closed here. Immediately the pin bar is confirmed and the price closes there. The price will still be up there when you're placing which is at the same level where it opened on the other side. Because remember, it closes that one and opens the other one. That's why you will find that the close of this bar and the open of the next bar, they are always around the same level, unless if we closed and opened with a gap. You can see we close here, we open there, close here, open there, close here, open there. So they are always at the same level. So when you're placing your sell stop, the price will still be here just after closing the pin bar. So now you're putting your sell stop there. In terms of this take profit, we are not analyzing. You put it at there. Next, opposing structure, which is going to be support or bullish trend line in this case. And the stop loss, you just go and put it has to be a decent size, good people. So this is sell stop. You can see here the amount of space that we left between the pin bar and the sell stop is very small, right? But where I'm placing my stop loss, I can't put my stop loss here, because otherwise you're going to lose. Some trades you're going to lose, and you find that the price had just was just overshooting. I'm sure you've heard me mentioning overshooting and undershooting. So you find that sometimes price will just undershoot your level, and then it will be a loss for you. So the stop loss must be like a decent size. Maybe that's too far, but I hope you can get what I'm trying to show you. Yes, compare the space that I left this side and the space that I left above, because sometimes you find that the price, the next bar can just go and do like this and then come back and be a second pin bar before taking off, which means if your stop loss is too close, you'll end up losing that trade, a trade that you could have won, or the trade that you were right in terms of the prediction, but the way you placed your stop loss, it was just against you. I hope this makes sense. And keep in mind that, I think I should mention this, as much as we're saying we're putting this and that, remember, take note, we're only doing that on our execution time frame, or the time frame where we are taking the trades, or the smallest time frame on our sequence. This is H1 here that we're looking at, right? So if we were to give an example, we would say maybe you are trading daily H4 and H1, or you're trading H4 and H1, with H1 being your smallest time frame, this H1 here. So if you are to place the buy stops and sell stops, you can only do it here. You can't put a sell stop on a pin bar that is happening at the highest time frame of your sequence. You can't do that. You have to, because remember, this smallest time frame, I'll just make another video, but I think I've made one where I was just clarifying how to use the combination, or which time, the time frame, this one is for what, and then like each time frame, what's the function of each time frame. This is the one, that's why you're calling it the execution time frame. This is where you're executing, this is where you're taking trades, meaning even the pin bars or the confirmation that you're waiting for, you want them to happen here at the smallest time frame on your sequence. And maybe let's say the price is going up and then it comes back to H4 bullish trend line or daily trend line, and then when you're waiting for confirmation, that's when you switch down to your smallest time frame to look for those pin bars, so that you can trade in the main direction of what, because remember, this tool will still be pointing up. That's why we are hitting the H4 trend line. It means the H4 is still pointing up, and obviously if the H4 is still pointing up, daily is also pointing up. So that's how you use the concept of a pin bar. I hope I answered your question, my guy. You just have to keep in mind that you're only applying that on your execution time frame and not on your highest time frame on your thing. Remember, for instance, if let's say you are still using daily H4 H1, right, and you get a pin bar here, remember, if a pin bar looks like this, if let's say we've been going up and then we hit a daily area of resistance, and then you get a pin bar like that on daily, this is still daily, you get a pin bar like that, I'm saying we can't go and sell and say we'll go and put the stop loss above the daily trend line, the daily pin bar, because of what? Daily is not our execution time frame. Daily is our highest time frame, where it tells us about the direction that we have to trade in. So it means for us to trade the pin bar, we have to get it there. But now in this case, it's a different scenario. You got the pin bar on your highest time frame. Now it becomes a question, how do you then trade using that? Keep in mind that if, let's say, this thing was going, it was going up before forming that pin bar. When you form the pin bar on daily like this, because remember, one daily bar, it's equals to 24 H1 bars candles. So it means all of this, when you go down to your smallest time frame, you will find the 24 candlesticks. And look what it did. It moved from this going down like this. So it means on your smaller time frame, what you're most likely to find is that the price was going up, and then those 24 candlesticks, they are here, they're somewhere here, which is why they give you they move to the downside on daily. So what does this mean? It means when I'm going to my execution time frame to try and take advantage of this, like I'm saying, you can't execute this from daily, but you can take advantage of it from your execution time frame, where we'll go and say the trend line has been broken, we can sell, knowing very well that our highest time frame is having a pin bar. Then that's when you get to trade in that direction. That's how you trade the pin bar on your highest time frame. You don't execute the whole thing. You only execute the whole thing with what? A sell stop if it was formed here. I hope this makes sense. I hope you answered, my guy. I'm gonna leave it at that. If you guys still have more questions, you're more than welcome to ask anything. Maybe it's something that I mentioned in my videos and you feel like you need more clarity on it, you can just put it in the comment section, and then I'll try and make a video to try and clarify that. Alright guys, I'm gonna end this one here, and don't forget to like and subscribe. I'll see you in the next one. Sharp.